Okay, here we go. Okay, so today we will work on this set of paper, June year 2002. Okay, so all this usual stuff, you can see this, the total mark is 100. Okay, and oops, it's too bold. Okay, and we have 5 questions. Okay, and then we will finish all today. Okay, so let's see how much time we need to spend on this. Okay, so let's see. I have arranged a little bit on paper so that we will show the resource booklet materials. Okay, and then we will also have the stuff here. Okay, why are there chats? Okay, let me see. Okay, let us wait a little bit first. Let me check. I should have arranged it better. Okay. Okay, I'm not sure. Okay, it's okay. Okay, I hope you can still see it. Okay, a little bit messy, but we can still do it. Okay, so I've arranged it like that. Okay, so that it will be easier. Okay, but when you take the exam, you will have one separate individual booklet. Okay, for resources. Okay, for questions, for information, and then one answer booklet. Okay, so in this first question, let us take a look. Okay, I will almost always look at the questions first because I need to know, okay, what's it about, okay, before I jump into the resources. Okay, so let's look. Okay, so some questions, okay, and then some accounting concepts. Okay, and then calculate the adjustment needed for the allowance for double that. It actually guides you on what you need to do. Okay, and then after this you have the extended trial balance. Okay, so this is what I mentioned yesterday. Okay, one of the most important topics. Okay, it usually appears in the first question, extended trial balance. Okay, and this time we need the adjustment column and also the figures should be transferred to the statement of profit or loss. Okay, so 2 plus 2 columns. Okay, and then the whole question 20 mark. Okay, that's good. I like it because it is easy to get marks in this extended trial balance. Okay, so we know that it is extended trial balance. Then we will start to type it here first. Extended trial balance. Okay, because it is important. Well, yes. Oops. Oh, what happened? Extended trial balance. Okay, here. Okay, so let us take a look. Okay, you work as an accounts assistant for a firm of accountants. You have been provided with the following email from a client of the firm. In addition to the extended trial balance provided on page 3 of the question paper. So you have this email. Hi, in order to complete the accounts for this year, you will need the following information. Number one, I have valued closing inventory at cost $96410. Included in these are the following items, okay, that have been damaged. Okay, 3 items that are damaged. Okay, so we have to test for impairment. Okay, impairment testing. Okay, before we go on to the actual calculation, we have some questions to answer. Okay, and after we have answered this, okay, it will be quite easy for us to deal with these items. Okay, and number 2, trade receivables, $710 to be written off as irrecoverable debt, and also allowance for doubtful debt to be 5% of trade receivable. We have to see whether we have any opening balance on this. Okay, so let's get to the first 3 points. State which international accounting standards applies when valuing inventory. So we have IAS2. Okay, that will get you 1 point. Okay, and before we go on to the next part, calculation part, okay, sometimes you're asked to explain what IAS2 requires you to do with inventory. Okay, and then we have this lower of cost or net realizable value, NRV. Okay, so if we know this, okay, then it is simple. Okay, for the next part, okay, calculate for the year end the value of inventory. Okay, so let us go back to the information given to us. Okay, originally we have 96410. Okay, before the impairment test. Okay, but then we have 3 batches of goods that might be impaired. Okay, they are damaged. Okay, but they can be impaired or not impaired. Okay, let's see. The first item, ASE20097, quantity 59, unit cost. This is the cost. Okay, unit selling price. Okay, if there is this is the usual unit selling price, but because it is damaged, so we have the comments here. Could be sold at 25 per unit. After repairs, costing $6 per unit. So it can be sold at 25, but then after we pay for 6, so the net realizable value now, okay, let me write it here. Net realizable value is 19. Okay, so we can see, okay, or we shouldn't write it here. Let me put it here. NRV being 19. So it is not impaired. Okay, if it is not impaired, then we do not have to, make any adjustment. Okay, only when it is impaired, that is the market value, the new value is lower than the cost, then we have to make adjustment. Okay, so the next item, this one is good. Okay, the next item, A41, we have 45 units. Okay, 21. Usual selling price 40, but it can now only be sold for 15. Okay, so the net realizable value is 15 now. Okay, that means it is impaired. Okay, it is impaired, so we need to make adjustment. Okay, the impairment is $6 per unit multiplied by 45. So 645, the impairment loss is 270 here. Okay, so impaired, this one. Next item, D09, 165 items, cost being 14, 25 usual selling price. It could be sold for 22 per unit after repairs costing 10. Okay, so again, 22, 10. So now the net realizable value is only 12. That means, again, it is impaired. Okay, so again, we look at the impairment loss. Here we have a loss of $2 per unit, and we have 165 times 2. We have 330 as the impairment loss for the second item. 2 items impaired. Okay, so we need to make that adjustment. Okay, so 96410 being the 96410. Okay, let me write it here first. Okay, and then we have 6 and 45, is it? Let me check. 45, yes. Okay, and then minus 2 times 160. Okay, we have 2 impaired batch of goods. Okay, 260, and then times 2330. When you are working on papers, okay, you don't need to copy it 2 times. I just show you. Okay, so the value of inventory is 9. Let me see, 45 multiplied by 6270. Okay, why do I get this wrong? 270. Okay, so we have 95810. Okay, be careful. If you show this as your first step, make sure you also show 270 and 330, because these are items that get you marks. Okay, so if you have already made the rough work, the workings in the first page in your resource booklet, okay, you can skip the first step. Okay, but usually I will show everything. Okay, in case they also award marks, okay, for the first step for the workings. Okay, so next one, explain. Referring to an accounting concept, why an adjustment for damaged goods was required. Okay, so the concept, okay, we have several concepts that is needed in level 3, okay, and inventory, okay, would be prudence. Okay, indeed, okay, when we look at, just now we have what law of cost or NRV. We also have 2 important accounting concepts here. Okay, if usually, okay, goods will be valued at cost, okay, because of the historic cost concept. Okay, but then when we have impairment, then we have to look at net realizable value. That is the prudence concept impairment test. Okay, so explanation for prudence. Okay, we have to ensure we do not overstate inventory. Okay, that is our asset. Okay, also, okay, because we do not want to overstate inventory, okay, it can also ensure that we do not overstate our profit. Okay, because closing inventory is related to the amount of profit we have. Okay, you are only awarded 1 mark, so I would prefer the first item. Okay, but then if you have to explain more, then you have to link closing inventory with profit as well. Next one, calculate the adjustment required for the allowance for doubtful debt. Okay, so for the allowance for doubtful debt, we need to look at the balance. Okay, so opening balance for allowance for doubtful debt being 2010. This is our opening balance. Okay, and we also have trade receivables 40230. Okay, so I will write the numbers here first. I immediately forget. Okay, let me see. It should be, okay, let me mark the notes here. Okay, my notes here. Okay, opening balance, okay, being 2010. Okay, and then trade receivables before adjustment we have 40230. Okay, so in the question you are asked to, first of all, write off 710 first, okay, and then you have a 5% allowance. Okay, so here we have to calculate closing balance of allowance for doubtful debt. Okay, I like to separate the steps so that you can see more clearly. Okay, but then if you don't like, okay, you can save time. Okay, so this is the trade receivables, and we have to write off 710 first, and then 5%. Okay, giving you minus 710 and then 5%. Okay, giving you 1976. Okay, and then the next step, okay, we have opening balance being larger than the closing balance. Okay, so there will be a decrease in the allowance. Okay, being 2010 minus this amount, 1976. Okay, being 34. Okay, decrease. Okay, decrease. Okay, I almost every time I will write the direction because it is important. Okay, so there is a decrease in allowance. Okay, that means it is an other income for you. Okay, 34, finished. Yeah, 1 mark. Okay, you don't need so many things. Okay, you will only be awarded marks for the figure for 34. But then if you do not know the direction, you may get it wrong in the next part. Okay, so let's continue. Okay, here I will adjust this allowance first, okay, because we just finished it. Okay, adjustment column. So if we want to write off an irrecoverable debt, it is an expense for you. Okay, that's why 710 here. Okay, and then reduce the amount of trade receivables, because trade receivables is a debit account. Okay, that's why I will have to credit it. Okay, so next one is the allowance for doubtful debt. Okay, we know we want to decrease the amount by 34. It is a credit account. Allowance is a contra asset. It reduces the amount of asset. Okay, contra asset. That's why. Okay, it is a credit account. Okay, we reduce it by debiting. Okay, and also the allowance for doubtful debt adjustment. Okay, 34 here in the credit side because it is an income. Okay, income is in the credit side. Okay, finish. Okay, so how about closing inventory? We still have 2 items. Closing inventory, just now we have calculated the amount to be 95810. This is the amount. Okay, so how will we put it? Okay, you can see, okay, there is no item here. Okay, that means we will put the whole amount 95810 in the adjustment part. Okay, if you have the figure here, then you just put the adjustment. Okay, so Closing inventory, statement of financial position. In the statement of financial position, it is an asset, so it is in the debit side 95810, and in the credit side you will put it, okay, in the closing inventory for the statement of profit and loss. Okay, why it is in the credit side, closing inventory? Is it an income? No, but then it is an item to reduce the cost of sales, okay, which itself, the cost of sales itself is an expense. So negative, negative, we have positive. Okay, so it is in the income side. Okay, so we finish everything for the adjustment. Okay, because we only have 2 items. Sometimes you will have adjustment for correction of error. Okay, sometimes for depreciation, for a gross prepayment, but this time you only have 2. Okay, the impairment adjustment, as well as the adjustment for irrecoverable debt and the allowance for doubtful debts. Okay, so that's all. So let's put it in the columns for the statement of profit and loss. Okay, allowance for doubtful debt, the first one, okay, it is in the SOFP. Okay, because it's contract asset, it is not in the statement of profit and loss. So please do not put it there, nothing here. Okay, just skip the item. Opening inventory, it will appear in our statement of profit or loss. Okay, in the debit side, because it is in the cost of sales, positive cost of sales. Returns in is in the debit side, returns out in the credit side. Okay, so I'm not going to spend time on these 2 items. I think you get it. Okay, if you don't, you have to go back to the trial balance, okay, to see why it is debit credit, okay, for returns. Okay, trade receivables, it is in the SOFP, statement of profit and loss. Okay, so it will not appear in this column. Allowance for doubtful debt adjustment, this time it is. Okay, credit, go to credit, you don't need to think. Okay, closing inventory, statement of financial position, already mentioned here. Okay, and then statement of profit or loss, closing inventory 95810. Irrecoverable debt, debit side, go to debit side 710, finish. Okay, 13 marks. Okay, let me count 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13. Yes. Okay, 1 entry for 1 mark. Okay, 13 easy mark. Okay, if you know the stuff. Okay, we have finished this question. 20 marks. Done. Okay, next part we have it here. So let me change the question details first. Okay, this time we have the bank reconciliation. I have to see how I have to make it so that I don't have to adjust it every time. Okay. My cat is going through the stuff in my drawer. I have to stop her first. Hey, bad. Okay, shouldn't. Yeah. It complains. She complains. Okay, why I don't let her play. Okay, so next one. Next, we have the bank reconciliation. Okay, sorry for the check boxes. Okay, next time I will get rid of them before I go live. Okay, so you can see, okay, we have to prepare the bank reconciliation statement. Usually we update the cash book first, but then it goes in part B. Okay, part B, update the cash book. Okay, and then bank rec. Okay, and then some questions. Okay, and then some advice. Okay, 5 points. Okay, and we have 18 marks here. Okay, so I hope you still remember bank reconciliation is level 1 materials. Okay, it is no more difficult than level 1 things. Okay, so let's take a look. So on the 1st of April, dates are important. Every time we go through a date, we have to ask ourselves, what date is that? Okay, so 1st of April, the company's bank statement show a different balance from the balance in his cash book, of course. Okay, he identified that the following transactions had not yet been processed by the bank. Okay, we put items that have timing differences. Okay, don't play. Okay, we put in the bank reconciliation statement the items that has timing differences. Okay, it's not an error. Okay, but then there's timing difference. Of course, if there is an error in the bank, okay, then we also put it in the bank reconciliation statement to, tell the bank, not to tell the bank. You have to tell the bank, of course, but then in this reconciliation statement, you tell yourself, your boss, okay, your accountant, that this is an error from the bank. Okay, so let's see. We have 3 things: check received from Shao, and then check issued to Lui, and then cash banked. Okay, these 3 have not been processed. Okay, so what's important is we know this is a receipt, this is a payment, and this is also a receipt in the bank. Okay, cash bank, your bank account receive money. Okay, you have to identify whether it's receipt of pay or payment. Okay, because receipt will go in the same side. Okay, same sign as well. Okay, and then payment goes to the opposite. Okay, prepare the bank reconciliation statement at 1st of April showing the bank statement balance at that date. Okay, so we will start from the balance in the cash book per cash book. Okay, now we have to be careful because usually if we haven't updated our cash book, we won't do this first. Okay, anyway, it is given, we have no choice. Okay, and then we have to calculate the balance per bank statement. Okay, unpresented checks. Okay, these are payment. Outstanding lodgements, these are receipts. Okay, so payments goes here. Okay, if it gives us space, so we should use them. Okay, check issued to Lui. Okay, if you are given the check number, you should also put in the check number. Okay, Chow. Okay, and then cash banked. Okay, it is 2751685. I haven't put the sign yet. Okay, because I want to invite you to think. Okay, so we have to think of the direction because bank rec can start with the cash book balance or it can start with the bank statement balance. Okay, if I do not want to memorize, okay, I have to, learn the stuff. Okay, so unpresented check. Okay, in our record, we have already paid this Lui. Okay, but then in the record of the bank, okay, the payment is not yet made because the check is not presented at the bank. Okay, so we have already deducted the amount here. Okay, but then we haven't deducted the amount here. Okay, so how to make it balance? Okay, we add. Okay, deducted, we add back, then it is not deducted. Okay, and for the same reason, for receipts, okay, in our books, we have, let me see, yes, we have already added to our bank balance, okay, because we have received the money, okay, we also have, you know, really take the cash to the bank, okay, so it's recorded in our own record, okay, this is added, okay, but then here it is not added. Okay, so added to not added, we have to take it away. Okay, that's it. Okay, if we start from the bank statement, then we have to, you know, minus 151350 and then add 1960. Okay, it will be the other way around. Okay, so here we have 3951350. Okay, we have a balance of 215 negative. Okay, be careful, negative. This is an overdraft. Okay, if it is an overdraft, I will also write it as an overdraft. Okay, my cat is very excited. Okay, it's playing by itself, biting on my sofa. Okay, crazily running. Okay, so next. Just now we have gained 4 points. Okay, so on the 30th of April, is it the same date? Let me see. 30, oh, okay. This is the next month, okay? The month, the dates are important. Okay, we are preparing the bank reconciliation on the 1st of April, year 2022. And then 1 month later, we are looking at the cash book. Okay, so we check the bank statement and identify the following items had not yet been entered into the cash book. Okay, so you are told which items are, you know, not yet entered in the cash book. Okay, sometimes, okay, these items are mixed together. You have to determine yourself. You have to distinguish. Okay, this time you are not asked to distinguish. Okay, it's given to you directly. A check received from Chan 150 had been returned by the bank as unpaid. Okay, so dishonored check. Okay, so we receive money, we record it as a receipt. Okay, but then now it is not a receipt because we cannot receive the money. So it goes into the credit side, the payment side here, payment, receipt. Okay, so 30th April, year 2022. Okay, and then, okay, we have to do this. Okay, dishonored check. Okay, 150. Okay, it is a payment because it is a contra item to the receipt that we have earlier. Item 2, bank charges 40. Of course, we pay. Okay, 40 bank charges. Okay, the same date. And then bank interest received 35. Okay, a receipt. So 35 interest receivable. Okay, remember for interest, if it is an income, because by default an interest is an expense. So if it is an income, interest received, then you have to you know, mention that it is interest income or interest receivable or interest received. Okay, to show that you know it is, you know, an income. Okay, it's not an interest expense. Okay, so 3 items, and then we have to balance 1710, 1540, and then we have a balance 1555. balance carry down. Okay. Sometimes you will want to save some time on writing the date. Okay. Sometimes, okay, if marks are available, okay, you will be awarded 1 mark for all correct date, okay, and appropriate, you know, labels. But sometimes you will not be awarded anything, okay. But if you are aiming at, you know, full marks, very high marks, distinction, okay, you should pay attention to these little details. Okay, it will get you a lot of points, maybe not a lot, okay, but then maybe 5 points out of the whole paper, okay, or you may lose the whole 5 points. Okay, so you can see here we have 4 items. Okay, usually you will be given, okay, 1 mark, 2 mark, 3 mark, 4 mark, okay, here or here, okay, either one. Okay, usually it is the balance on the 1st of May, okay, because they want to see if you also know how to, you know, carry down, brought down. Okay, and then 4 marks here for the entries, and then 1 mark, okay, for all the necessary date and label that you make. Okay, usually it is like this for 5 marks. Okay, so 5 marks finish. Okay, it is time for us to answer some questions. State 2 differences between a standing order and a direct debit. Okay, so 2 differences: standing order, direct debit. Okay, both of them are payments. Okay, we are not, you know, going to mention the similarities, but then you have to know it first, right? Okay, so I have to say, usually a standing order, okay, is of fixed amount. Okay, and then a direct debit, variable amount. Okay, just like you pay your electricity bill, okay, it is different every month. Okay, but then when you pay your insurance bill, okay, it is fixed. Okay, so standing order, insurance, electricity bill, direct debit. Okay, so next one is I think more of the nature of these 2 types of payment method. Okay, standing order is actually an instruction from the payer to the bank. Okay, you instruct the bank to make the payment to the insurance company. That is your instruction to the bank. Okay, but then for direct debit, it goes the other way around. Okay, of course it is an instruction, but then this instruction is actually a permission. Permission for the payee to transfer an amount from the bank account. Okay, that is, okay, you allow the electricity company to tell the bank how much is needed for the month's bill, okay, and then it is taken from your bank account to the bank account of the electricity company. It is a permission for the electricity company to get money from your account. Okay, so it's essentially this, you know, 2 different things. Okay, but then of course it is still a payment. Okay, next one. State 2 accounting concepts being applied when writing off a debt as irrecoverable. Why is it here? Why is it not in the first question? Okay, irrecoverable debt. So, first thing, always it is because of prudence. Okay, it is possible that you can you know, you cannot get the amount from your trade receivables. So if there is a possibility of a loss, then you have to record it immediately. Okay, but then if there is a possibility of a gain, then you will not record. Okay, so next one, okay, a little bit less direct, accrual concept. Accruals, okay, why? In the first place, why do you have trade receivable? Because you make a sale. Okay, this year, current year, you make a sale. That's why you have trade receivable. Okay, that's why it is possible that next year you have irrecoverable debt. Okay, that is a problem. Okay, because the sales is made in the current year. Okay, and if you do not, you know, provide for depreciation, not depreciation, provide for irrecoverable debt, okay, then maybe it is written off in the next year. Okay, or if you do not write it off in the current year, it becomes an irrecoverable debt for the next year. So you have to be careful, okay, which accounting period you should account for this irrecoverable debt. Okay, according to the accruals concept, matching principle. Okay, your expenses should be matched to your income. Okay, next one, 2 marks again. Next one, we are still on question 2. How much time did we spend? Okay, it is 40 minutes. Okay, good. Advise the owner whether he should sell on a cash only basis. Okay, what happens now? We are not told. We are told. Okay, because our debtors pay, our trade receivables pay by check. Okay, maybe sometime later. So, is it good to sell on a cash only basis? Okay, of course, there is always pros and cons. Okay, so I also teach A levels. That's why I usually love to, you know, separate my opinions into 2 parts. Okay, and then draw the conclusion. It is not a must. Okay, but then it is a good way to organize your answers. Okay, so first I will be saying that it is good to sell on cash only basis. Okay, oops, let me put it better. Okay, not good to sell on cash only basis. Okay, sorry for my poor handwriting. Okay, so is it good? Yes, of course it is good, because it will improve, okay, your liquidity. You will receive your you know, money from the sales immediately. Okay, improve liquidity. Of course, you might want to elaborate a little bit. Okay, I just put the point here. Okay, you can avoid irrecoverable debt. Okay, also, apart from avoiding irrecoverable debt, you can also save time and effort in managing trade receivables. Okay, it takes a lot of time. Okay, because if you are selling on credit, you have to you know, agree with your customers your credit terms. Okay, you have to sell to them. You have to send them their invoice. You have to send them their statement, monthly statement, and then you have to urge them to repay you. Okay, so much work. Okay, if it is by cash only, very good. I give you the goods. You give me the cash. Finish. Okay, nothing else. But then, how about not good to sell on cash only basis? Okay, you can see, okay, if you have competitors selling on credit, okay, and you are offering only on cash, okay, what would your customer think? Of course, okay, that you may lose business. Okay, to competitors. Okay, this is the most important item. Okay, sometimes you might have to offer at lower price. Okay, so 5 points. Okay, you don't need so much. Okay, here we can write 10 points already. Okay, make sure you make a conclusion. Okay, you draw a conclusion on that. Okay, for me, I will have to see, okay, what type of business it is. Okay, if it is grocery selling, of course, cash basis. Okay, but then if it is, if you are a wholesaler, okay, then most probably you can't sell on cash basis only, right? Okay, so here I would prefer, okay, to sell on cash basis only. Okay, because we are giving more points on the good side, right? Okay, so level 3, the evaluation part is not that demanding. If you can see 5 points, okay, you make conclusion just according to how many points you give in each side. Okay, so 18 marks, finish. Okay, 38 so far. Okay, and then we continue. So next part, okay, again, let me change the paper details, not the question details. This time we are working on a partnership. Okay, financial statement of partnership. Okay, let me change it. Yes. Okay. Oh, I should do this thing. Give me 30 seconds. I think this is good. Yes. Let me test it. Okay, just now we have what? Bank reconciliation. Okay. So yes, great. Okay, so I don't have to change it every time. Okay, this time it is partnership. Okay, partnership. Oh, I have misspelled it. Partnership. Okay, good. Okay, so next question, partnership. We have two partners, Caroline and Caroline and William. Okay, manufacturers. Oh, okay, manufacturers and then partnership. Okay, so again, usually I would like to look at the questions first before I go to the resource booklet. Okay, or before I drill into it. Okay, so 3 points here. Identify where each item will be shown. Okay, because we have manufacturing company, manufacturing partnership we have. Okay, so appropriation account, manufacturing, profit or loss. So finished goods, it will go into your manufacturing account. Interest on drawings, appropriation, raw materials, manufacturing. Oh, why I said finished goods will go into manufacturing. It will go into a statement of profit or loss. Okay, sorry for that. Okay, and then we have to prepare the capital account of Caroline, and then okay, the appropriation account for Caroline William and Lucy. Okay, so we have Lucy joining the partnership. Okay, and then for this appropriation account, we have to separate between the first 4 months of the year and then the latest 8 months. Okay, because I guess on the 1st of May or on the 30th of April, Lucy joined in the partnership. Okay, so we have to, apportion the appropriations. Okay, good. Apportion the appropriations. Nice. Okay, so 9 marks for the appropriation account. Okay, and then explain partnership salary. Okay, and then identify what 2 marks. Let us finish it first. Okay, it's 2 marks. Whether each statement is correct. Okay, so relating to a limited liability partnership. Limited liability partnership. Partnership are usually, having unlimited liability. Okay, but then we can have some limited liability partnership. Okay, you should know it already, or you go to the text. Okay, ask AI chat. Okay, we have a lot of resources that you can use. Okay, so all partners have unlimited liability. If that is so, it would not be called an limited liability partnership. So it is false. Must be registered with the Register of Companies. Yes, true. Okay, because all, if you enjoy limited liability, you have to register. Okay, for all limited companies. Okay, although it is partnership, but then some partners are enjoying limited liability. That's why you should register. Okay, so we have the remaining 15 marks for this question. Let us look at this. Okay, so you are given just tiny bit of information only. Okay, so Caroline and William are in partnership as manufacturers, sharing profit and losses equally. They agree that there will be no interest on capital and no partner's salary. Okay, so the simplest form of partnership agreement. Nothing, okay, and only share profit and losses equally. So the balances on the 1st of January, year 2021, that is the start of the year. Capital account, current account, okay, good. And for current, both accounts, they are in the credit side, except if you are told that it is negative balances. On the 1st of May, yes, okay, I am a profit, of course, okay. And Lucy joined 1st of May. Introducing capital of $120,000, goodwill was valued at $60,000. The goodwill is not to be maintained in the partnership books. Okay, the terms of the new partnership agreement were as follows. Profit and losses still shared equally, but then it is now for 3 parts. Originally it is 2. A salary of $24,000 per annum for Caroline, okay, better. Interest of 6% per annum on closing capital balances. Okay, this is good. Closing capital balances, because if it is not closing, then we have to, pay attention to the time factor, because in the first 4 months and the second 8 months, the balances are different. Just like if you make a bank loan, take out a bank loan, okay, you have to pay attention to the time that you take it out. Okay, but now it is okay because only closing balances. Okay, and for 8 months. 8 months. Okay, because in the first 4 months, according to the partnership agreement, no interest. So the profit for the year ended 31st December for the year, which was earned evenly, was 126,000. 126,000 we have to separate, separate. Okay, first 4 months, and then the second 8 months, the remaining 8 months. Okay, I'm a little bit tired, but we can still do it. Okay, so what goodwill? No, capital account of Caroline. Okay, which is the same as William. So if we finish Caroline, we finish William. Okay, so let me draw the lines first. For the year, right? Prepare, okay, for this year. So remember, for capital account, okay, it is in the credit side. Okay, so year 2021, the 1st of January, is it 75,000? Yes. Okay, we have 75,000 opening balance brought down. Okay, and then on the 1st of, on the 1st of May, okay, when Lucy joined in, okay, we have goodwill, 60,000. So from nothing to something, okay, we have more goodwill, and this is a gain, and this gain goes into the capital account of the original partners. Okay, so 30,000, okay, because it will be shared equally with William. Okay, so goodwill, 1st of May. Okay, but then immediately after the emission of Lucy, we will have to write it off. Okay, 1st of May, okay, we deduct the amount of goodwill. Okay, so it is a loss, less asset. Okay, and this loss have to be borne by the 3 partners equally. Okay, so 20,000 here, goodwill. Okay, so this is the goodwill creation of goodwill, and this is goodwill written off. Okay, so nothing more happened. So you have 31st December at year end. Let me calculate, 75, 30, 20. So you have 85,000, year 2022, 1st of January, we will have the balance as well, 85,000. Okay, you can see this time we have 4 marks. Okay, there should be no marks to be awarded to the date. Okay, but then still I will keep everything nice and neat. Okay, to show that I know. Okay, so make sure you know William also have this amount. Okay, because they have the same. Okay, but how about Lucy? Lucy is making a 120,000 investment. Okay, maybe cash, maybe other assets, I don't know. Okay, but then after this capital brought in, okay, there is a goodwill written off of 20,000. So the capital after adjustment should be 100,000. So next thing, appropriation. It will start with profit for the year. Profit for the year. Okay, so profit. Let me go back to the page where you are given the profit. 12600. Okay, 12600. Okay. Okay, let me change the pages first so that I won't have to go so far. What? How much? Okay, 126. Okay, 126. Let me write it down first. 126, and then it is earned evenly throughout the year. So 126 divided by 12 for the first 4 months, it will be 42,000. Okay, and then the other 8 months, 84. Okay, I have to add it back together to make it 126. Okay, good. Okay, because sometimes I can be, careless. Okay, that's why if there is a chance, I will do double check, triple check, okay, using different ways. Okay, next one. Okay, we have the appropriation items here. Usually, some textbook or other papers prefer using add first or minus first, okay, minus later, okay. But for me, I prefer a certain order, okay, because we don't have a particular order that is needed in our appropriation account. So I always start with salaries, okay, because it is a good way for me to use the same format every time. Okay, I don't have to, switch and think. Okay, there is no salary. Okay, in the first part of the year. Okay, but then second part we have what's her name? Caroline, right? Caroline. Okay, how much? 24,000 per year, but be careful, it is per annum. So we have to, factor. Okay, it is, after Lucy joined, it's only 8 months. Okay, so 24,000 divided by 12, 8 months, it is 16,000 negative. Okay, because these are money that is, distributed from the profit pool to the partners. Okay, that's why it's negative here. Okay, and then also what interest on capital. Okay, 6%. All 3 partners can enjoy this. Okay, so it is Caroline. Okay, let me just use. Okay, I will be good. Caroline, William. Please wait. What happened? Why do you vomit? Why? Hungry? Okay. Please come. Oh, shit. Okay, I'm back. Okay, William. And then we have Lucy. Okay, I will put the calculations here. Okay, I'm using a bolder stroke. Okay, so that when you're working with ball pens, okay, you should have enough space. Okay, so just now we have already calculated, okay, the capital, closing capital, okay, 85,000 for both Caroline and William. Okay, and then here, okay, so 6%, okay, and then 8 months, let me check on one point first. Okay, so let's continue. 85,000, 6% for 8 months, 34,000, 34,000, and then 4,000. Okay, so after this, okay, we will have the profit available for distribution. Okay, we have 42,000 here because nothing is given yet. 84, 160 minus. So this here I have to explain a little bit. Yeah, let me finish first. Okay, so distribution of profit, okay, share of profit for Caroline, for William, and for Lucy. Okay, 42,000, so 21000. Nothing for Lucy. Okay, and then 57200 divided by 3. It is not a whole number, and that's why I want to explain. Okay, 6, 7 here maybe. Okay, poor Lucy, you come late. Okay, so I will give you $1 less. Okay, we can do this. Okay, 42,000, 57200. Okay, so sometimes when we face those answers that is not a whole number, we get panic. Yes, I will too. Okay, but I want to explain. Okay, I guess when you work on past papers, you also look at, suggested answers, answer keys. Okay, this time, okay, if you look at the answer key, they give you a different answer for Lucy's interest on capital. They will give 4,800,000. Okay, how will you get this figure? It will be 120,000, 6%, and then 8 over 12. Okay, and that 120,000 will be the capital introduced by Lucy. Okay, but then there's a problem because after this, we go back. Okay, we have to be very careful with the wordings. Okay, you can see Lucy joined the partnership introducing capital of 120,000. So it is very clear the capital introduced is 120. Okay, and then goodwill valued at 60,000. Okay, and then goodwill not to be maintained in the partnership's books. Okay, that means you have to write off goodwill. There is no way. Okay, there's no way you this 120,000 is already net of goodwill written off. It is not that. Okay, look at the language. Okay, that's why sometimes sadly I have to say the answer key is incorrect. Okay, I have to point out. Okay, because we don't teach or we don't share just according to answer key. Okay, there's no meaning. You can learn, you can just revise to the answer key. Okay, but what we do here is we learn what should be done in the proper way. Okay, that's why I have to change that. Okay, so here we finish this appropriation account. Okay, although sadly we cannot get a whole number for the share of profit, and then and we cannot give 19607 for Lucy. Okay, if you do that, okay, you will have -1. I mean, you will have you will distribute more than what you have as profit. Okay, so after this, okay, let us go on to the 2-point question. Explain one reason why Caroline received her salary. That is partnership salary. Why? Okay, so for every item in the partnership agreement regarding distribution of profit, that is a reason. Okay, for salary, it is usually to compensate for the time, okay, and the effort in managing the business. Okay, maybe Caroline is a full-time partner of the business. Okay, every day she worked there. Okay, she managed, she get in touch with customers or something like that. Okay, and for the other partners, maybe they contribute in different ways. Okay, maybe they provide expertise by being a consultant. Okay, or they pull some string for you. Okay, but then the most important day-to-day work, okay, might be done by Caroline. Okay, that's why it is fair. Okay, you have to point out. Okay, it is fair to pay this Caroline salary. Okay, so we finish question 3. Let's move on to question 4. Question 4, okay, is related to single entry and incomplete records. When you look at the format, okay, always like this, you have some balances, and then a bank summary, and then some other information, and then you have to work on the statement of profit and loss. Okay, and before you work on the statement of profit and loss, you calculate the balances. Okay, so these are very important items that you need before you work on the remaining financial statements. Okay, so 2 points, 6 points. Okay, and then complete the statement of financial position. Okay, this time it is the statement of financial position. Okay, and you are, they are really kind. Okay, you are already given the format. You don't need to worry about that. Okay, if I were want to set the question, I won't give you that. Okay, so 20 marks. Let's see. State 2 differences between financial accounting and management accounting. Okay, so financial accounting, management accounting. Financial accounting are compulsory, right? Mandatory. Okay, you have to prepare at least a set of financial statements, statement of profit and loss, statement of statement of financial position. This is a must. Okay, for public limited company, you have to have whole set. Okay, but then for management accounting, okay, it is optional. Okay, and you don't have, very rigid format to follow. Okay, you just tailor your reports according to your needs. Okay, so how about the second difference? Okay, usually I would say financial accounting is for external use. Okay, external users. Okay, like the government. Okay, like the shareholders. Shareholders, why do I say that they are, external? Okay, because shareholders don't manage the company, so they are external users. Okay, they share the profit by receiving dividends, but then they do not manage. Okay, and maybe banks or something like that. Okay, but then for management accounting, it is for internal users. Okay, that means manager, okay, or staff to help them make decision. Okay, internal users. Okay, so let's see. Hilmi, okay, we have this person. Hilmi maintains a gross profit percentage of 40%. A profit for the year as a percentage of revenue, 18%. Okay, inventory turnover 5 times. So this is single entry as well as accounting ratios. Okay, so I hope you know gross profit percentage, right? Gross profit over revenue. Okay, and then net profit over revenue. Okay, and then inventory turnover in times. It is cost of sales over average inventory. Okay, we need these, okay, to help us calculate. Okay, so what we need to calculate: cost of sales, average inventory, closing inventory. Okay. So if you know average inventory, you can calculate closing inventory by this formula. Okay, purchases, cash drawings, profit for the year. Oh, I have to admit, this is not a typical single entry question. I haven't changed the question details yet. Please wait, let me. What? Single entry? Okay, accounting ratios, right? Okay. Let me put the space in between. Okay, better. Wait, what happened? Okay. Okay, so what is given? We have to calculate these things. Okay, let us have these in mind first. Okay. I'm a little bit nervous. Okay, I like these challenges. These single entry I like putting, in the puzzles. I love this. Okay, so here we provided the following information on the 1st of February. Every time we look at the date, remember we have to, know what is given to us. So 1st of February, it is year start. Okay, because for this year end, it is 31st January year 2022. Okay, here. Okay, so these are opening balances. Opening bank cash, equipment, carrying value, inventory. Well, I like this item because just now we said we need average inventory. So now we have opening. Okay, so trade payables, trade receivables. Okay, next thing. For the year ended 31st January, okay, during this year, we have cash sales, we have receipts from trade receivable, okay, and then in the payment side, payment to trade payables, general expenses, wages, equipment, Okay, purchase of equipment. Okay, and also drawings. Okay, and then next part we have cash sales 22,000 were banked after payment of wages 3300. What? General expenses 1400. No record was kept for cash drawings. Okay, okay. So cash sales given to you directly 22,000. Okay, it is used in 4 things. First, okay, it is paid for wages, expenses, cash drawings, and then the last one being cash sales banked. Okay, so if we have to calculate, okay, remember we have next part for us is to calculate cash drawings. Okay, then we can calculate here. Okay, 22,3300. Okay, let me remember the items. I forget immediately. How much? 22,000, is it? 22,3300, and then how much? 1483. 1483. Okay, and then we have, okay, 9,000 as cash drawings. Good. First item, only 1 mark. Okay, next part. Credit sales. Credit sales given to you directly already. Okay, 114,000. 114. Okay, okay. Good. Okay, can we have something here first? Okay, credit sales, cash sales. Okay, 114. Okay, so total sales. Okay, we are not asked here, but then it is important because you can see we need sales here in these 2 items. Okay, so total sales, how much? I forgot again. 114. Okay, total sales would be equal to your credit sales plus your cash sales. Okay, 11422 136000. Okay, let me not double underline because it is not a final answer. So if you get this, then you also get gross profit and net profit. Okay, because 13600 being your sales, gross profit being 40% of it, and net profit being 18% of it. Wow, I like this question. It is very nice. Oops, 136, 40%, 54,400. Net profit 136, 18%, 24480. Okay, if that is so, we already know cost of sales. Okay, cost of sales would be total sales, sorry, here 136,000 minus 5440, or you can use 136,000 multiplied by 1 minus 40%. Okay, the same. Okay, so 81600. Good. Okay. Okay. So here, a profit for the year we also have it 136000, 18%. Okay, so 24480. Why is it so nice? Okay, if it is like that, okay, without looking at the other items, we also know average inventory because we know cost of sales already. Okay, here you can see here. Okay, inventory turnover is equal to 5 times. Okay, so we have cost of sales. Cost of sales being 81600. Okay, and then we can calculate average inventory. Okay, 81600 divided by 5. So average inventory by 5 is equal to 16320. Good. If we have average inventory, 16320 multiplied by 2, and then we have opening inventory marked by this heart here, 19400. Okay, 19400. Nice. 16320. 19400. 13240. Yay! Great. Okay, one more item, purchases. Okay, we can't have it here yet. Okay, but then let's see. You know, if we have opening inventory, closing inventory, we have cost of sales. Of course, we can find purchases, right? Okay, so we have it here already. Okay, so opening inventory at purchases minus closing inventory is equal to cost of sales. Okay, we have 3 items already. We don't have purchases. So purchases is equal to cost of sales 81600 minus opening inventory 19400 plus closing inventory. How much? Yeah, 13240. Yay, finish. How much? 816 194 132. Dozen 816 13240 75440. Yes. Okay, 6 mark. I have to say this 6 mark is difficult to get. Okay, out of the whole paper so far, okay, not that direct. Okay, you have to know the relationship between all these figures. Okay, and we still have a bunch of other things that we haven't go through in the resource booklet. Let's see. What else? Okay, all purchases are on credit. Cash in hand was maintained at 100. So if cash in hand is changed, you can imagine cash in hand is either, you get the money from the bank, or you put some of the extra cash into the bank, or you keep some of the cash sales. But here is we are lucky that there's no change. Okay, so we don't have to deal with it. Okay, so equipment is depreciated 10%, reducing balance method. Full year depreciation charge in the year of purchase, none in the year of disposal. The simplest type. Okay, so I will calculate here. Equipment. I will, because we don't need depreciation. We only need the closing balance. So I will use the quick way. Okay, 12200, we have made purchases 16600 here. Okay, so this is the purchases, and then it will be depreciated 10%, so the net book value will be 90% of what we have here. Okay, 11200, 166, 90%. Okay, we will still have 115740. 115740. Okay, let's go. 115. What? Where? When? How? Yeah, here. 115740. Okay, so the remaining items, how many marks here? 12 marks. Okay, why is it worth 12 marks? Okay, so let us discuss a little bit before we go on. I mean, before we fill in the figures. Okay, inventory, we have it already. Cash, you are given that it is 100. Okay, closing inventory, let me also fill in. Okay, we have to figure, why do we have to wait? Okay, yeah, what happened? Why are you jumping? Inventory, closing 13240. Okay, and then equity, we are not given the opening, we have to calculate. Profit for the year, we have it for already 24480. Okay, this is in our previous part. Okay, drawings. Okay, if we have some cash drawings and then no more. Okay, and this is what we have calculated as well. Trade payables, bank overdraft. Okay, these two parts, these few parts, actually we only have a few items left. Opening equity, trade receivable, payables, and then overdraft, bank overdraft. Okay, so we have, for receivables and payables, the same things. We have opening balances. We have the total credit sales and credit purchases. We have it already. Okay, and then we also have the total receipts and payments. Receipts from trade receivable, payment to trade payables. And these three components help us to find the closing balance. It is the same for receivable and payables in this case. Okay, sometimes we have more. Sometimes we have irrecoverable debt, we have returns, we have discount. Okay, but then this time we don't have. Okay, so what we need, okay, is to know the relationship. Okay, for trade receivable, trade payables. Okay, opening balance plus credit sales, credit purchases minus receipts, payments is equal to closing balance. Okay, we need closing balance. We have the three things in the left hand side of the equation. So that's it. We put all the items that we have. Okay, opening balance of equity, we need to look at the opening balances. Okay, because equity the accounting equation, asset is equal to equity plus liability. That means equity is equal to assets minus liability. Okay, we all know. Okay, so we only need to know the opening balances of assets and liability, then we can find the opening balance of equity. Bank overdraft. Okay, that is the closing bank balance, whether it's overdraft or a normal balance. Okay, we have an opening bank balance, we have all the receipts, all the payments. Okay, then we know closing balance. no big deal. We know it all. Okay, single entry. Okay, is already in you know, second level, level 2. Okay, so let's put the figures. So we have a whole page for workings, okay, but I will skip that page. Okay, I won't use it because I have already put everything here. Okay, so we will use this to help us. Opening balance of trade receivable. Oops, where is it? Here. Okay, let me arrange a little bit. Yes. Okay. Opening balance of receivable 96008450. 96008450. Credit sales 112, is it? Or 114? Oh, 114. 114000. Credit purchases we have already calculated in the last part. Okay, 75440. Receipts and payment given to us in the receipts in the bank summary 112500. 112500. And then payment, okay, here 75190. 75190. Okay, then here comes our figure 114, 112, 11100. 11100. Okay, trade payables. Okay, 8700. 8700. Trade payables. Okay, so 2 items missing. Bank overdraft and also balance. Okay, so bank balance first. Okay, at the start of the year we have 860. We are not told that it is a negative balance, so I will assume that it is positive. Okay, so 860. Okay, the balance is here, although it is not shown, but then we know it is here. Okay, and then we have receipts, and then we have all those payments. Okay, so we have, okay, after all this, a balance carry down of 990 to balance the account. Okay, 990 here. Balance brought down. This is overdraft. Okay, so 990. Last item, opening balance. Opening balance of your equity. Okay, we will focus on this part. Okay, let me erase the unnecessary markings here. Okay, so we have to calculate equity, so we have to know the opening assets and liability. Okay, so asset, I will use it as positive, liabilities negative. Okay, only trade payables is a liability. Okay, be careful. This time you are given the bank balance and the cash balance here. Sometimes it is hidden somewhere else. Okay, and you have to remember to include it. Okay, so all the assets minus the liabilities 133,5 Okay, sometimes you are asked to calculate this equity by working on a statement of affairs. Let's see if we will meet these items in other papers. Okay, then you have to show it nicely, just like the statement of profit. The statement of financial position. Okay, 133510. Okay, so 133510. Let us see if we can balance this statement of financial position. Why? What happened? Let me see what's wrong. Yeah, here. Okay, I'm sorry, I omit this one. Okay, drawings here, 18500 drawings. Okay, there is drawings drawn from the bank. Okay, so it is not 9,000. Okay, here you have 9,000 plus how much? 18500, 9,000 plus, okay, 27500. Okay, okay, whoa, it's close. Okay, question for finished. Okay, it's 10, 11 past 10. Okay, 1 hour and 40 minutes already. Okay, so let's go on to the last question, question 5. Well, what is this? Okay, this is, oh, wow, wow. Okay, so this one, depreciation. I do not know if you like it or not. Okay, my students are very, not very friendly with this topic, I can just say. Okay, I hope we are okay. Okay, and apart from depreciation, we also have statement of cash flows. Okay, so new item in level 3. Okay, don't know if you're okay as well. Okay, I am okay. So let us start. Last question. Okay, we also have a 5-point evaluation question on a decrease in cash and cash equivalent. Okay, okay. So let's see. We don't have to. Do we have to work on it? Yes, yes. Okay, we do. Okay, okay. So let's see. Equipment account, the provision for depreciation of equipment account, as well as the disposal account. Okay, and the year end is 31st May, year 2022. Okay, let's read the question. The balances, opening balances are given to us. Okay, let's see. Of course, we have purchase and we have disposal. Okay, what else can it be? The directors of this company provide the following information in addition to the incomplete statement of cash flows for this year. On the 1st of March, okay, that is towards the end of the year. Okay, we have 31st May as the year end. Okay, so 1st of March, equipment costing 38,000 was sold for 15200. This equipment had been depreciated by 18544. Okay, well, that is very straightforward. Okay, equipment costing 85,000 was purchased, and you are even given directly the amount of depreciation charge here. Oh, how come? That is too simple for level 3. Okay, so disposal first, right? Okay, 38,000 sold for 152. Let me copy all the figures first. Okay, I type all the figures there. 38,000,18544. Okay, so given directly that the equipment had been depreciated by this amount, okay, and the cost. Okay, so first, when? 1st of March, right? 1st of March, year 2022, you have the disposal. Okay, so this part we have to be careful. I mean the description. Okay, remember we have to look at the exact wordings, okay, in the account. Okay, so next we have 1st of March, year 2022, disposal. We have to take the amount of accumulated depreciation of the disposed asset from this account. Okay, so this is transferred to the disposal account, 38,000,18544. Let me write the description nicely. 1st of March, year 2022. This is the equipment. Equipment cost, and then the equipment provision for depreciation account. Okay. Not very nice, okay, but it is what it is. Okay, so the next thing I will have to put the amount of proceed, 15200. Okay, so you are not told how you receive the money, how much, 15200, right? Okay, so we always assume it is by check or by bank transfer. Year 2022. So are we making a profit or loss? Let me see. 3. Oh, loss, of course. Okay, 1518544, 15200. So we are making a loss of 4256. Okay, to be put as the last day of the year 2022, statement of profit or loss. Okay, balanced. Finish. Okay, so what's next? You are given directly the amount of depreciation for the year being 92154. 92154. 92154. 92154. Okay. So, provision for depreciation, it is contra asset account, so addition is in the credit side. So when you are writing, making depreciation charge, okay, you add to the provision, you accumulate it, right? So 31st May year 2022, I will put depreciation here, depreciation, or statement of financial position. Okay, so you have 92154. Okay, later I make the balance. Okay, I want to put into the purchase of new equipment as well. When do you make that purchase? Let me see. 1st of April purchases. 1st of April year 2022. Bank, is it bank? Okay, let us go back and see. Okay, not specified, so always assume it is bank. Okay, so I am very tired already. Okay, we have to balance the account. 1, 2, 3, 5, 8, 0, 0. 1, 2, 8, 2, 8, 0, 0. Okay, this is the balance carried down, balance brought down. 1st of June year 2022. Okay, what else? 1, 2, 8, 2, 8, 0, 0. Okay, so next 3 4 5 3 4 1 4 balance. What? 31st May, 1st June 2022. Balance brought down 4 5 3 4 1 4. Okay, good. Okay, so finish. How many marks here? 11. Okay, that's not bad, because you just need to know the concepts. You are given all the figures. Okay, I don't know why it is level 3, shouldn't be like that. Okay, anyway, okay, we go to the last part. Okay, this is an incomplete statement of cash flows. Okay, most of the items are given to you. We just need to fill in the remaining. Okay, so profit for the year, or not really profit for the year, but operating profit. But if you don't have interest, you have tax. You don't have tax, then operating profit is equal to profit for the year. Okay, so next part, depreciation charge for the year. Just now you are given that the depreciation charge is 9, how much? Nine 92154. Okay, and then you also have a disposal loss. Let me check. Disposal loss of 4256. 4256. 56. Oh, what happened? 6. 6. Okay, the pen is back. Okay, now the point is it added or subtracted from profit? Okay, both will be added. Okay, I hope you know the format for statement of cash flows. These two items are adjustment for non-cash items. Okay, depreciation charge, it is deducted from profit, okay, because it is an expense. Disposal loss, it is deducted from profit because again it is an expense. But both items, okay, are non-cash items, non-cash expense. Okay, you do not pay for depreciation. You pay for the purchase of an asset and then later depreciate it, okay, which involve no cash. Okay, that's why you have to add back, okay, because it is deducted from profit, but there is no cash effect, so you add back. Okay, so next item, you have to calculate the net cash from or used in operating activities. Okay, so for me, you may also put these two items here, okay, but then I don't prefer because usually I like to have subtotal here, but you are not given any space. Anyway, I will put it there. 141644. Okay, and then I have to calculate these two. 60854 negative. So it is 80790. Okay, so finish one part. Let me change to another color. Okay, investing activities. Okay, so you have acquisition of equipment. I remember it is 85,000. Okay, so you make a payment to purchase. That's one negative. Disposal proceeds of equipment. You receive money because of the disposal. How much do you receive? 15200. You receive money. Okay, so 85,000. 15200. It is 69800 negative used in net cash used in investing activities. Okay, and one more thing, why is this used in bracket like this? Should be like this. The bracket should be here because it is net cash from investing activities, or if it is negative, it is net cash used in investing activities. Okay, so not so good. The format, not so good. Okay, do we have to put in anything else? No, I guess. Okay, debenture repaid, dividend paid, loan received, given to you, and then that's it. Okay, that's all. Great. We have finished 95% of the paper, and one little part left would be the last part, evaluation. Okay, evaluate the causes of the decrease in cash and cash equivalent. Okay, so why do we have to evaluate the causes? So strange. Okay, you should say evaluate the cash position, right? Anyway, okay, it's the same thing. I understand what it is asking me to do. Okay, so we have to look at how cash is used. Okay, so let us go back to this area. First thing, it goes from a positive cash and cash equivalent balance 94,300 to a bank overdraft. Very bad. The decrease is such a large amount. Okay, 50,710 decrease in cash and cash equivalent. Not good. Okay, so who used up the amount? Okay, we can see when we have to interpret, make analysis of the statement of cash flows, we look at these three items, right? Operating, investing, and also financing. Operating has to be positive all the time, always. Okay, if we have a negative operating cash flow, then we will have a very big problem, because we are not even making enough cash from our daily operations, from the sales. Okay, we are making negative, we are making outflow, because we purchase more, we spend more. Okay, that is big problem. But if we have a positive balance here, we can still survive. Okay, so good that we have a positive operating cash flows. Okay, but then negative part, we can see we have a lot of a large outflow from investing and financing activities. Okay, so we have purchased equipment, okay, 85,000, okay, making the investing activities a negative cash flow of almost 70,000. Okay, that is our the biggest amount spent. Okay, but then for me, that is not the most difficult situation, because usually we have to make negative cash flow in investing activities. It is a normal situation. Okay, we have to invest in the company, we have to buy new fixed asset. Okay, and when we dispose it, okay, we cannot make much money from it. Okay, it's normal. Okay, we continue to invest. Okay, and usually when we invest, okay, we actually expand the company, and we actually improve the prospect of the company, the potential of making a better profit in future. Okay, so yes, it is negative, but it might not be that bad. Okay, but then the next part, okay, debenture paid. Okay, it is matured, we have to pay it, we have no other way. Okay, if not, we our creditors might declare bankrupt on us. Okay, seek for liquidation, we have to repay. Okay, there's no way. Okay, so and then because of that, we also have to take our loan. Okay, but then this loan, 18,000, a little bit more than that, is not able to cover the amount of debenture redemption. And worse still, we have no cash, and we are paying a large amount as dividend. Okay, so for me, this one is more problematic. Okay, of course we have the profit. You can see we have net profit of 45,000. We can pay, but then if we don't have the cash, why do we have to pay so much? Okay, maybe we have to be more prudent in our proposal of dividend. So that's what I want to say. Should I write something down? Yes, of course. Okay, I will not use the next page. Maybe we use it here to make it, to be able to look at it. Okay, so we have to evaluate. Okay, on how the money is spent. Okay, the change, what is it? The decrease in cash and cash equivalent. Okay, so for operating activities, okay, we still need to mention, okay, it is a positive cash flow. It has a positive cash flows, okay, which is good. The company is making money. Okay, so this part, it may not get you any marks, because you are asked to work on the decrease in cash flow, but I think it is important that we also know how we are going to analyze the whole thing, not just the decrease. Okay. The company's operations seem healthy. Okay, we cannot say must be something, must be good. Okay, I like to use this word, okay, more ambiguous. Okay, seem to be healthy. Okay, so next part, investing activity. Okay, the company spent a lot of money, 85,000, for the purchase. Okay, she's hungry maybe, of equipment, of new equipment. Okay, it contributes much to the overall decrease. Okay, I will say it like this. Okay, but then as I've told you just now, I think this is not bad. Okay, however, not bad, right? Okay, it might lead to positive profit prospect in the future. Okay, so this is not good, not bad. Okay, for me it is not. Okay, so last one, financing activity. The debentures are redeemed. Ayo. Point maturity. Maturity. Okay, so I would combine debentures with the taking out of new loan. Okay, so you need 500,000, but then you can only borrow a new bank loan, okay, for 18,000. Okay, you cannot cover it. Okay, and then the next part, okay, the most problematic part. Paid 30,000 dividend, even though there is no cash. Okay, so my second point is that the company is paying that much amount of dividend. Of course, I have already explained. Okay, and you can see the profit is 45,000. That means the dividend is almost 2/3. Okay, almost. Okay, not yet 2/3. Okay, of your, is it 2/3? 66%. Yes. Yes. Okay, of the whole amount of profit. Okay, you don't need to pay that much dividend, especially if you don't have the cash. Okay, so remember, for evaluation question, you need a conclusion. Okay, so the conclusion you make, for me, okay, you must mention this dividend part. Okay, it is not healthy. Okay, there's too much decrease. Okay, and the most problematic part, you can mention that it comes from dividend. Okay, and that's all. So, yep, we have finished the whole thing. I think this set of paper is not very difficult, but then it, consists of some parts. Okay, statement of cash flows is not a very popular topic here. Okay, you need very high level understanding for this topic. Okay, although how the question is set is not that difficult. Okay, it's quite straightforward. Okay, but then you still need the knowledge base to deal with this question. Okay, and for some other questions for single entry, okay, it needs technique. Okay, so I hope you all enjoyed tonight. Okay, and yes, and our next stream, I think, will be on Saturday. I'm not sure yet. Okay, so if we are working on the next stream, it would be on which set of paper? Let me think. Okay, so as I've told you, we will focus on resources available on the official website. So the next most current past paper available there would be for December year 2021. So we will deal with it. Okay, hopefully it will be on Saturday night. Okay, if I am at home Saturday night. Okay, so questions are invited. Okay, or if you have any set of paper you want me to try, you can voice out. Okay, thank you. Thank you for supporting Love for Accounting. See you.